Hey everyone, my name's Andy. My channel is Finding Value. If you like making money, just that easy, just click subscribe. I talk about investment opportunities in the most undervalued sectors in the world. If that interests you, I would definitely subscribe to the channel, ride the commodity bull market up with me and everyone else that is subscribed to the channel. So I want to cover something, I call this the biggest enemy. And when I look at myself, I can see myself right there in the camera. That is the biggest enemy. It's yourself. And that's going to be the biggest enemy. This next commodity bull market is going to be yourself, and you're going to have to manage yourself, your emotions, your fear, your greed, all of those things. So in this presentation, I'm going to talk about all of those things. The biggest enemy, which is yourself, to be successful in investing in this next bull market. So this is the biggest enemy. So what is the biggest enemy? It's when investing, you're going to realize a few things. I'm going to go over what those things are and what you need to be aware of. Greed and fear are what runs the market, and more importantly, it runs you. You need to be aware of these emotions and how they can wreck your portfolio. So my suggestion is become a robot. You need to become more of a robot when it comes to investing. Detach yourself from your emotions. This is the sequence or order of operations that you should be executing. It's see value, see chart pattern, execute program. That is it. It needs to be automatic with no emotions or price chasing involved. I don't want you chasing price. Price is not the thing to chase. Remember, I always say it, value, see chart pattern, execute program. Fear and greed. We will experience fear and greed during this bull market. We will. If you're a new investor, it will feel like you're doing opposite of what your body is telling you. Opposite of what your emotions and body are telling you. When you are most fearful, you should be looking to invest. Most greedy is when you should be sitting tight. These emotions can flip on a dime depending on market actions and get you all mixed up, flipping between greed and fear and back to greed. That is where you can get all worked up if you don't have a strategy or a plan. So what do? If we're flipping between fear and greed and you're getting worked up mentally and feel exhausted, stop. You're not following a strategy and you're getting worked up with emotions. I need you to be in a state of calmness and in a state of logic when using a strategy. So the biggest enemy here, your biggest enemy to your returns this next bull market is yourself. The moves will come, the strategy needs to be in place, and you need to develop yourself to accept the gains by being patient. Your time frame needs to be adjusted to be longer than what your expectations are today for most new investors. I know everyone wants their returns now. Markets don't care about your returns or your timeline. Think 5 to 10 years and get paid. That's what I'm doing. That's my thought process. And I think you'll get paid if you have that thought process and that time frame. So the strategy here is develop a strategy. And in a strategy, this is what it should include. It should include portfolio allocation amounts, the sectors you want to be in, the companies in each sector you want. Know exactly each company and why each company is in your portfolio. Know if they are producing or if they're an exploration company or if they're developing a mine. Refine your portfolio if you need to based off of new information or if a better opportunity presents itself. Upfront work for rewards later on. And I'm going to share my strategy a little bit. I do a 30, this is kind of what I'm going after, 33, 33, 33, physical metals, real estate, and stocks. So a third. Those are percentages. I'm very heavyweight physical metals versus most everyone else that I know of. I do the ratio games with them, and they do increase my portfolio holdings. So I am getting a very good return even in my physical metals by doing that strategy. I have 401k mutual funds. IRAs are in individual stocks of varying risks and other accounts with much higher risk involved. So I'm not I'm looking at risk. I'm looking if it's a producer or an exploration company or a developer, and I'm adjusting my portfolio allocation in relationship to how much risk and reward those companies have. I am playing this bull market in its entirety from undervalued to overvalued, given the ratios. That's what I'm playing. And those ratios are the stocks to commodities, and then also gold to whatever sector, other commodity it is. So gold to copper ratio, gold to uranium ratio, gold to oil ratio, whatever that commodity is. The sectors that I'm in, I am favoring copper, silver, platinum, gold, tin, zinc, iron ore, aluminum, and a few others. Those are the base metals and some other precious metals. I'm favoring energy, oil, uranium, and natural gas. I also have healthcare, real estate, a little bit of agriculture in the fertilizers, and a little bit other stuff. I also have some rare earth metals as they are needed for electric vehicles. And if we're going to ramp up electric vehicles and renewables, rare earth metals are needed. So what I want you to do is I want you to develop your own plan. Develop your plan, find the companies or mutual funds that you like, look for a good entry point or point to cost average in, and then wait. Wait with me on this channel. Post comments below if you become impatient, and we can chat back and forth, and I can help you out. I don't want people getting scared out of their positions during this next bull market, and I'm here to help you. My last statement here, I just want to make sure everybody understands this. Price is not a validation of value. Price can be distorted in the short term, and be careful how you invest based solely off of price movements. I just want to share that. The way that I invest is I look at value, and then what I hope to happen is that value is realized over time. And if the valuations are really way down to the downside, I'm hoping that they move to the way high end on the opposite side. And that's usually what happens, is that these things cycle back and forth. The smaller the overshoot, the smaller the undershoot. The larger the overshoot or undershoot, the larger the undershoot or overshoot. So if it shoots way down to the downside, I expect a very large overshoot. We are seeing this in uranium. We're seeing this in oil. Very large undershoots to the downside in terms of valuations, which I think screwed up supply and in turn will overshoot to the upside in the future. So develop your strategy, guys. Write it on down. Figure out the companies you want to be in. Look at your portfolios. Look at the sectors. Look to see how much you have allocated to those sectors and see what you want to do. Be prepared for this big move. If you guys have any questions, put it in the comment section. Please put it in the comment section. I shared a little bit of what my valuations are, the sectors that I'm in this presentation. You guys can go back, you can pause it and see what I'm in. It doesn't have to be what I have. Do what works for you. Do what works and your knowledge that you know the best of in those sectors. Do what you know best. Do what you are most comfortable doing. And if that's mutual funds and ETFs, do that. I have both. I have mutual funds, ETFs. I have individual stocks. I have exploration companies, developers, producers, big diversified miners. I have everything. I'm prepared for this big bull market that's ready to come. If you guys like this content, give me a thumbs up. And I appreciate you guys listening. This is Finding Value.